Hello, everyone. Welcome to our fourth quarter webinar, Online Sales, Remote Sellers, and Marketplaces. My name is Alyssa Mangold, and I will be your moderator for today's event. I want to mention first that today's webinar presentation is intended as a general guide and not as a comprehensive resource on the subjects covered. It is not a substitute for legal advice. I would like to introduce our presenter for today's webinar, Talia Pokaigui with Tax Policy.
Hello and welcome to today's webinar. As Alyssa said, my name is Talia Pokaigui, and today we will discuss online sales, remote sellers, and marketplaces. Today's webinar is packed with a lot of great information that will benefit everyone who sells items online. Let's dive into this webinar. Today, we're going to cover the tax responsibilities of online retailers who sell tangible personal property, or TPP. We will not address online retailers who provide taxable services under Chapter 151 of the Texas Tax Code, such as data processing services, information services, amusement services, or telecommunication services. We will discuss some definitions so that you can better understand the terms we use, what remote sellers are for our purposes and some special provisions for them, what are marketplace providers and sellers, and what constitutes a marketplace sale. And most importantly, we will cover the tax responsibilities of different types of online sales and sellers. We will also go over several examples throughout the presentation so that you have a better understanding of the information. Although we can't cover all possible scenarios, we will cover several common ones. Let's start with some definitions. First, we'll discuss tangible personal property, or TPP. TPP covers a wide range of items. For instance, the handbags and clothing you see in this picture, along with appliances, and yes, even your pets. TPP is personal property that is perceivable in any manner and includes computer programs and prepaid calling cards. TPP also includes digital versions of items like music downloads and digital books and movies. The next definitions are of sellers and retailers. A seller or retailer is someone who is engaged in the business of selling taxable items. A retailer or seller is also someone who makes 3 or more sales in a 12-month period. Retailers or sellers also include salespersons, representatives, peddlers, canvassers, and marketplace providers, who we will talk about a little later. As a result of the Supreme Court's decision in the South Dakota versus Wayfair case, the 86th Texas legislative session created changes to some sellers' Texas tax responsibilities. This court case is the reason why responsibilities for some out-of-state retailers and online sellers have changed, and why you may be seeing sales tax in places you hadn't before. We have amended sales tax rules, publications, web pages, and other writings to implement these changes. Ever since use tax became effective in 1979, Texas residents have had the responsibility to accrue their own use tax if they were not charged sales tax on taxable transactions. Because of this legislative change, though, more online sellers now have the responsibility to collect Texas sales and use tax up front because they are considered engaged in business in Texas. So let's take a look at what causes sellers to be engaged in business in Texas and responsible for collecting Texas sales and use tax. Multiple business activities can cause you to be engaged in business in Texas. This can include, but is not limited to, Having a physical presence in Texas through a temporary or permanent location. For instance, you may have physical presence through a kiosk, office, distribution center, or sales room in Texas. If you are selling online from your home or business in Texas, you have a physical presence in this state. The bottom line is, if you have any physical presence in this state, you are engaged in business in Texas. If you have employees in Texas, you are also engaged in business here. Some examples can include, but are not limited to, independent salespersons, employees, exhibiting products at trade shows or conferences, and affiliates or related businesses that accept returns in Texas. A common instance is employing a contractor or a subcontractor to sell items or do work for you. Your employees being physically present in Texas causes you to be engaged in business in this state. If you deliver items into Texas using owned, leased, or company vehicles, then you are also engaged in business in Texas. If you rent or lease equipment or other tangible personal property to customers in Texas, you are engaged in business in this state. For example, an Oklahoma company leases some equipment to their customer here in Texas. This business activity of having their equipment leased in Texas causes the Oklahoma company to be engaged in business in Texas. And lastly, remote soliciting. If you sell over $500,000 of items within a 12-month period through catalogs, mail orders, the internet, or any other medium, then you may be engaged in business in Texas. We will discuss the situations and conditions when a remote solicitor may be responsible for collecting Texas taxes later on in the webinar. But first, in the next several slides, let's see if you have an understanding of the definitions we have gone over so far. Let's get started. Let's get started by filling in the missing words in these sentences. If I have blank or blank in Texas, I am engaged in business in Texas. I'll give you a few seconds to think about this. Are you ready? Okay, if you said, if I have physical presence or business activities in Texas, I am engaged in business in Texas, then you are correct. So if I am engaged in business in Texas, I have certain tax obligations, right? Now I know we haven't talked about this yet, but what do you think you'll need from our office? Help me complete this sentence. As a seller engaged in business in Texas, I need a what? I'll give you a few seconds to think about this. Okay, if you said, as a seller engaged in business in Texas, I need a Texas tax permit, then you are correct. If you are physically in Texas, you are not a remote seller. So if you are a Texas resident or have a store in this state, you are not a remote seller. And don't worry, we'll define who is a remote seller shortly. Now let's go over the tax responsibilities of sellers located in Texas. Now, as a Texas seller, you must have a Texas sales tax permit. You can apply for a free sales tax permit online using the comptroller's web file system, in person at a local field office, or by mailing in an application, Form AP-201, which is available online or at a field office. As a permit holder, you must also file a sales tax return to report your sales. When you first apply, our office will set you up as either a monthly or quarterly filer based on the information in your permit application. However, our office may change your filing period to either a monthly, quarterly, or a yearly basis, depending on the amount of taxes you collect and remit to our office. You will be notified if your filing frequency changes. As a retailer or seller, you can give a properly completed resale certificate to your vendors to make tax-free purchases of items that will be resold to your customers. For instance, Mandy sells posters on her website. Mandy runs out of posters and wants to buy more posters to stock up prior to the holiday sales rush. She can give her supplier a resale certificate instead of paying tax on posters that she buys to resell. Mandy, however, cannot give a resale certificate for any items not held for sale, such as office supplies, desks or computers for her office, or other items she uses to run her business. And finally, as a Texas seller, you must collect tax on any taxable items that you sell or deliver in Texas. Texas state sales and use tax is 6.25%. Local taxing jurisdictions, including cities, counties, special purpose districts, and transit authorities, can also charge a local tax rate up to an additional 2% for a total maximum tax rate of 8.25%. Now let's talk a little more about when to collect tax and on what items. If you sell items and ship them outside the state, then these items are not subject to Texas tax. Be sure to keep proof of an out-of-state delivery in your records, such as a bill of lading, a shipping invoice, or a postal receipt. Now keep in mind, you may have to collect tax for another state if you are engaged in business there. You should contact the states where you buy or ship merchandise to find out if you are responsible for paying or collecting their taxes. If you sell and deliver taxable items anywhere in Texas, you'll charge tax on the item's sales price. The sales price is the total amount an item is sold for, which includes any related charges, reimbursements, and fees, meaning shipping and handling charges are part of the sales price and are subject to tax. You will generally first collect sales tax based on your place of business. If your business is in an area that charges the maximum tax rate of 8.25%, then you will collect 8.25% on any taxable items you sell and deliver anywhere in Texas. For example, a seller within the city limits of Austin sells and ships a taxable item to their customer in Houston. The current tax rate within Austin city limits is 8.25%. In this example, the seller will collect the Austin taxes, not Houston's taxes. This applies even if an out-of-state resident purchases from you and they ask you to ship it to a Texas address. However, if you're in an area that does not have a local tax or the local tax rate is less than 2%, you may be required to collect additional use taxes based on the ship to address. You can take a look at tax publication 94-105, Local Sales and Use Tax Collection, a guide for sellers, for more information about this situation. Okay, let's do two quick examples to check your understanding of what we've been talking about so far. In these examples, you, the seller, are located in Texas. In the first example, you have a clothing store in Dallas. Jenny, in Florida, places a phone order for baby clothes, which she wants delivered to her sister in San Antonio. Using this information and what we've covered today, which city's tax do you collect? If you said Dallas, you are correct. Even though Jenny is placing the order from Florida and her sister is receiving the items in San Antonio, you would collect sales tax based on your Dallas business location. Let's look at another example. For this example, let's say you have a car parts store located in Wichita Falls, Texas. Thomas, in El Paso, Texas, places an order for a new carburetor for his son's car. Thomas wants you to ship this order to his son, who is located in California. Using this information and what we've covered so far, which city's tax would you collect? Are you thinking that this transaction is not subject to any Texas taxes? If so, then you are right. Since the item is being shipped to an address outside of Texas, Texas taxes are not due even though the purchaser is located in Texas. As the seller, you must retain documents verifying the out-of-state delivery. And remember, you may need to collect another state's sales or use tax if you are considered engaged in business in this state. All states have different tax regulations and collection responsibilities. If you have questions about your tax responsibilities in another state, please contact that state. Okay, now let's move on to our next topic, remote sellers. Now we'll cover who remote sellers are and some special provisions for them. As a result of the Wayfair court case that we discussed earlier, we amended Sales Tax Rule 3.286, Sellers and Purchasers Responsibilities, to include a section on remote sellers and their Texas responsibilities. In this rule, we define a remote seller as an out-of-state seller who has no physical presence in Texas and only solicits sales remotely through catalogs, flyers, the internet, and other media. Ultimately, the thing to remember is if you're physically located in Texas, then by definition, you are not a remote seller. We have a special provision for tax collection for remote sellers. Let's discuss this provision called the Safe Harbor provision. This provision relies on economic nexus and states that sellers generating less than $500,000 in total revenue do not need a Texas tax permit. So if you are below the safe harbor threshold of $500,000 in total Texas sales, meaning both taxable and non-taxable, and you are a remote seller, you do not have any Texas tax collection responsibilities. Instead, your Texas customers owe use tax on the items they purchase from you. They will report their use tax directly to our office on the use tax return Form 01-156, which is available on our website. There is also no transaction limit, meaning you can have multiple transactions and still have no Texas tax responsibilities as long as you do not exceed the threshold amount. And again, the safe harbor provision applies only to remote sellers. If an out-of-state retailer or seller has physical presence in Texas, they must have a Texas tax permit. Also, if a remote seller is below the safe harbor threshold, they can voluntarily choose to apply for a Texas tax permit and collect and remit Texas tax. We will now talk about the tax responsibilities of remote sellers who exceed the safe harbor threshold. Remote sellers exceeding the $500,000 safe harbor amount must apply for a Texas tax permit. If you are a remote seller who exceeds the safe harbor amount, you can apply for the permit online or mail the permit application to our office. You must collect Texas tax from your customers on taxable items sold and delivered in Texas. You must collect tax either based on the delivery destination or the single local tax rate or flat rate, which is currently 1.75%. If you choose to use the single local tax rate, you must send a written request to our office. If you do not opt for the single local tax rate, you must collect tax based on the delivery destination. The application of these responsibilities began October 1st, 2019. Additionally, there is no retroactivity prior to October 1st, 2019. However, if you need a permit and do not have one, you must apply for one immediately. To determine whether you initially need a tax permit, you will look back at your sales into Texas in the preceding 12-month period. If your total Texas sales are over $500,000 during this period, you need a Texas tax permit. This look back period does not go by the calendar year or a fiscal year. It is simply the 12 preceding months. If you have 12 consecutive months in which your total Texas revenue was less than $500,000, then you can terminate your tax collection responsibilities by submitting Form 01-798, Remote Seller's Intent to Terminate Use Tax Responsibilities, to our office. This form is available on our website. If, however, you have $500,000 or more in total Texas revenue, again in the future, then you must resume collecting use tax again and reapply for a Texas tax permit. If you are a remote seller who would like to use the single local tax rate, please send this request in writing using the information on your screen. The written request must include the taxpayer's name and 11-digit Texas taxpayer number, a statement requesting the right to use the optional rate and stating that you are a qualifying remote seller, the date the rate will be effective for you, which must be after October 2019, and the requester's contact information. To get a better understanding of remote sellers, let's go over a few examples and determine if the sellers in these scenarios are truly remote sellers. In this first example, there is an Oklahoma heavy equipment rental company who leases and rents equipment to their customers. Some of their customers are located in Texas. When this company leases or rents equipment to a Texas customer, are they considered a remote seller? This Oklahoma company is not a remote seller. They have a physical presence in this state and tax collection responsibilities because their leased or rented equipment is in Texas. Let's go over another example. Betty sells handmade crafts in Michigan. Betty attends the Round Top Antique Fair in Round Top, Texas, in hopes of getting more business. As a result of the show, Betty has generated more sales. When she sells her crafts to Texas customers after returning to Michigan, is she considered a remote seller? And the answer is Betty is not a remote seller. She attended a trade show in Texas, which gives her physical presence in this state, and she had to apply for a sales tax permit to attend this show. Betty is responsible for collecting Texas taxes while she has an active permit with our office. If Betty decides she will not be returning to Texas, then she can contact our account maintenance department to close her sales tax permit. Once Betty has closed her permit, she is a remote seller with no presence in Texas and does not have Texas tax responsibilities. If, however, her business does very well here and her sales to Texas customers exceed the $500,000 safe harbor threshold, Betty now has Texas tax responsibilities and must reapply for a Texas tax permit. The safe harbor provision would no longer apply in this scenario because the threshold was exceeded. Let's go over one last example. Here we have an out-of-state app developer in California who creates and sells web applications. They have sales representatives in Austin to promote and generate sales for their company. When the company sells their apps to Texas customers, are they considered a remote seller? If you said the company is not a remote seller, then you are correct. They have employees in Texas, which gives them physical presence here. As you can see in all these examples we went over, the out-of-state sellers were not remote sellers. However, if each seller did not have a physical presence in Texas, then they would have been considered a remote seller. Okay, now let's switch gears a bit and look at sales made through online marketplaces. A marketplace is a physical or electronic medium through which people, other than the medium's owner or operator, can sell items. This includes stores, internet websites, software apps, or catalogs. A marketplace provider is a person who owns or operates a marketplace and processes sales or payments for marketplace sellers. Examples of these are Amazon, eBay, and Etsy, among others. Now let's talk about the tax responsibilities of marketplaces and those who sell through a marketplace. Let's start with marketplace providers' responsibilities. As of October 1st, 2019, if you sell through a marketplace provider, your marketplace provider will collect and report the Texas sales and use taxes they collect from your customers for sales with delivery into Texas. If you operate a marketplace, you are required to collect Texas taxes for your marketplace sellers. Marketplace providers will collect tax based on the delivery destination. Marketplace providers must certify to their sellers that they will collect Texas taxes on their behalf. This certification must be in writing, for example, in a contract or terms of agreement. Note that there is no option to elect for the single local tax rate as a marketplace provider. Now on to the responsibilities of marketplace sellers. A marketplace seller is an individual who sells items through a marketplace provider. If you are located in Texas and sell through a marketplace only, you must apply for a Texas tax permit and file a sales tax report showing 0 Texas sales and 0 taxable sales. For example, let's say Cindy is a Texas resident who only sells through Amazon and has an agreement with them. Amazon will file and report all of Cindy's sales that were made through Amazon. Cindy is still responsible for filing a Texas sales tax return, even if there are no sales to report. On the other hand, if you are located in Texas and sell through a marketplace and at a Texas location, you must apply for a sales tax permit, collect sales tax from your customers on taxable sales made from your Texas location, report sales made to Texas customers outside of the marketplace, and remit the sales tax collected on those taxable sales. Meaning, if you sell through both a marketplace and a physical location in Texas, your sales tax return will only reflect the sales you made at your location. As an example of this scenario, Veronica sells her handcrafted creations at a Texas craft fair and through Etsy, a marketplace. Veronica is a marketplace seller. Etsy is responsible for collecting and remitting the tax on sales made through the marketplace. Veronica will only have to report and remit the tax she collected from the Texas craft fair. Be aware, you must still file your sales and use tax returns timely to prevent any late fees, even if you do not have taxable sales to report. Now, what if you're a remote seller who sells through a marketplace? If you are a remote seller and sell into Texas only through a marketplace, then you do not need a Texas sales tax permit. Keep in mind, if you make sales to Texas customers through any means other than a marketplace, you will need to compare your total Texas sales to the safe harbor amount. If your combined remote and marketplace sales into Texas are above the safe harbor threshold, then you need to apply for a Texas tax permit and collect, report, and remit the tax on your remote sales only. As a reminder, the safe harbor threshold is $500,000 of total Texas sales, both taxable and non-taxable. Certain tax exemptions and exceptions may apply to some of your sales. For example, you may sell some items to an exempt organization or to someone who wants to buy your products for resale. In these instances, you will need to document the transactions as being exempt with either an exemption certificate or a resale certificate. These two certificates look very similar but are used in different transactions. These certificates are available on our website as Form 01-339. The resale certificate is the front side of this form and is used when your customer is buying an item that will be resold. If your customer is a Texas retailer or permitted remote seller, they must include their active 11-digit Texas taxpayer number, which you can verify on our website. If your customer is a non-permitted remote seller, meaning they are not required to have a permit, then they can give our resale certificate with their out-of-state retailer registration number instead of a Texas taxpayer number. Keep in mind, this certificate can be accepted from retailers, sellers, or wholesalers purchasing for resale within the United States or Mexico. The exemption certificate is the back of this form and is used when your customer is purchasing an item under any tax exemption. There are multiple sales tax exemptions available. These include purchases by governmental entities, such as federal, state, and local governments, manufacturers, and qualifying nonprofit organizations. Be aware, if the buyer does not provide a properly completed resale or exemption certificate, or you do not choose to accept their certificate, then you must charge Texas sales and use tax. Keep in mind, there is no statutory requirement for sellers to accept a resale or exemption certificate. Let's wrap up today's webinar with some examples and scenarios. Our moderator, Alyssa, and I are going to talk through these examples so we can have a full understanding of sellers' tax responsibilities. I know a lot of information has been covered today, so hopefully these examples will bring together everything that's been discussed and help you better understand your tax responsibilities. For our first example, we'll talk about an online bookseller.
So Talia, in this scenario, the bookseller says, we sell digital books online. Since they are digital downloads, not in a physical form, we are not selling tangible personal property. Would that be right?
Well, Alyssa, I would let this seller know that tangible personal property includes items in different mediums, including digital copies of books or movies and music downloads. Digital books are subject to Texas tax as tangible personal property.
Okay, so digital books or digital copies of books are TPP in Texas. What if the seller is not in Texas? Is the statement correct that they do not need a Texas permit in that situation?
Well, maybe. Are they under the safe harbor provision of $500,000 of Texas sales in the previous 12 months? If they are, then they are correct that they do not need a Texas permit. If they are not under the threshold and have had over $500,000 of Texas sales, both taxable and non-taxable, then they do need a permit.
So their responsibilities would depend on whether their Texas sales are above or below the $500,000 safe harbor threshold. Got it. So then they give us a little more information saying that they will be in Austin to promote their book, but will not be making sales. They will just be here for the publicity. Does that change their responsibility?
Physical presence in Texas, even if temporary, to promote sales creates nexus. So this company needs a sales tax permit.
Okay, so to wrap up this example, if an out-of-state retailer sells digital items and has a physical presence in this state, they need a Texas tax permit. Great. All right, let's go over another example. So in this next scenario, the retailer sells tables in their store in North Dakota and online through their business website. What would your response be if they asked what their Texas tax responsibilities are?
Well, similar to the last example, we need to know if they are above or below the $500,000 safe harbor threshold and if they have a physical presence in Texas before we can provide a definitive answer about their Texas tax responsibilities.
Okay, we need more information. I see. So when we ask for more information about their sales, they tell us they have had less than $500,000 of Texas sales in the last 12 months. So it looks like they're under the safe harbor threshold and have no Texas responsibilities, right?
It depends. We still don't know about their physical presence. Do they have salespersons here in Texas? Do they deliver the tables in company trucks? More information is still needed.
That's right. There is more that we need to consider. Okay, so now the seller gives us the whole story. They do not have a presence in Texas and are under the safe harbor threshold, so they do not need a Texas permit and should not charge Texas tax, right?
Right. Because we know that they do not have a presence in Texas, they are true remote sellers and are not required to collect and remit Texas tax.
So there's no Texas tax due on purchases by Texas residents from this company?
Well, not so fast. Texas tax is due because TPP, like a table, is taxable in Texas, but it is the purchaser's responsibility to report it in this situation. If the seller does not have the responsibility to collect Texas tax on the transaction, then their Texas customer owes use tax on their purchase. Remember, when a retailer or seller does not collect sales tax, then use tax is due. Use tax is due on the use, storage, or consumption of a taxable item in Texas. As a purchaser in Texas, if you bought an item without being charged sales tax, then you must self-accrue and report the use tax to our office.
Got it. So it's either sales or use tax, right?
Right, it's one or the other, not both.
Okay, Talia, let's look at one more example. This next one is probably the most common one for sellers. So in this situation, we have a Houston seller who does business through their Texas storefront, business website, and through an online marketplace. This does not sound like a remote seller.
Right, this seller is not a remote seller and they need a Texas sales tax permit because they have a Houston location.
And we don't even have to think about the safe harbor threshold either because they're not a remote seller. This seller needs a Texas sales tax permit, period.
Correct.
So what are their responsibilities? They believe they only collect tax on sales they made in store or through their business website. What about the marketplace sales?
Well, the seller's responsibilities vary depending on how the sale is made. So this example is correct. The seller will collect, report, and remit the sales tax only on sales made at their store or through their website. The marketplace, however, will collect, report, and remit the Texas tax on the transactions made through the marketplace. And as a reminder, Sales that the Houston company makes through a marketplace will not be included on their Texas sales tax return.
Okay, I think these examples should have given our attendees a better understanding of what we discussed here.
Great. So let's wrap up by looking back at our agenda and doing a quick recap of what we've covered today. We defined tangible personal property, or TPP, remote sellers and marketplaces, and we discussed the tax responsibilities of different types of sellers, including retailers in Texas and out of state, and those who sell through marketplaces like Amazon, and those who sell through marketplaces like Amazon. We also went into detail about the $500,000 safe harbor provision for remote sellers, as well as the single local tax rate that remote sellers can collect if they have opted into this rate. And that brings our online sales, remote sellers, and marketplaces webinar to a close today. If you would like more information on Texas taxes, we offer various resources on our tax training resources webpage, such as taxability videos, podcasts, seminars throughout the state, and an archive of our quarterly webinars covering a variety of topics.
Okay, thank you to our attendees for participating in this webinar, and thanks again to our presenter today, Talia Pokaigui. And as a reminder, the forms and publications referenced in today's webinar are all available on our website, comptroller.texas.gov. Y'all have a great day.